What if I told you 90% of what you think you know about the stock market is wrong? And that understanding this one misconception could mean the difference between building real wealth and losing your hard-earned money. Today, I'm revealing the shocking truth about how the stock market actually works, not the fairy tale Wall Street wants you to believe. By the end, you'll see why good companies sometimes fall, why mediocre ones soar, and the dead simple strategy that beats 90% of pros. I've spent 23 years studying market psychology and helping beginners invest. What I'm sharing today comes from 70 years of data and lessons from legends like Warren Buffett. Let's dive in with the biggest lie you've been told. Here's what most beginners get wrong. They think the stock market reflects the economy. If companies make money and people have jobs, stocks rise, right? Wrong. The market measures what investors think will happen, not what's happening. Example, your friend Adam makes guides for Fortnite and Call of Duty. He sells shares at $10. You buy one thinking gamers will always need help, but your share's value depends on belief, not how many guides Adam sells, but what people believe about gaming's future. If VR is expected to explode, your share might hit $50, even with zero VR sales. If people think gaming's dying, it drops to $2, even if profits soar. This is what Nobel Prize winner John Maynard Keynes called the beauty contest problem. You're not picking the best company, you're guessing what other people think is best. Back in the 1950s to 70s, companies cared about shareholders, employees, communities, and customers. CEOs made 22 times worker pay. Then economist Milton Friedman convinced everyone companies should only care about stock prices. Today, CEOs make 350 times wages, and 80% of their pay depends on stock performance. So now, instead of growing businesses, many use financial tricks to boost stock prices, like firing thousands just to hit quarterly numbers. But don't panic, there's a way to win this rigged game. Listen closely, because this could make you wealthy. Warren Buffett, the world's top investor, says most people should just buy low-cost index funds. Why it works. You own hundreds of companies automatically. Fees are tiny, no research needed. Over 20 years, this beats 90% of money managers. But the biggest secret? Controlling your emotions. When everyone's making money, that's dangerous. When everyone's panicking, that's often the best time to buy. So here's what to do. First, only invest money you won't need for 10 plus years. Markets are wild short-term, but reward patience long-term. Second, set up automatic monthly investments. This forces you to buy in good and bad times and beats leaving cash in savings earning less than 1%. Third, ignore the noise. Checking daily is like weighing yourself hourly, stressful and pointless. Most importantly, avoid get-rich-quick promises. If someone says that, run. Quick recap. The stock market measures expectations, not reality. It's twisted to favor short-term gains. But you can still win by keeping it simple with index funds, staying patient, and managing emotions. Now you've got the goods. If this opened your eyes to how the market really works, smash that like button. It helps more beginners find the truth. Share this with anyone thinking about investing. They'll thank you later. And for more no BS investing advice Wall Street hates, hit subscribe and ring that bell. I drop new videos weekly breaking down complex finance into simple strategies. Remember, you don't need to outsmart the market. Just understand it, stay patient, and let time work its magic. See you in the next one. Keep investing, keep learning, and keep building wealth. Peace and profits to you all.